Good morning, everyone. This is Angelos Zittis from IronFX, bringing you the morning comment for the 10th of September. USD remains firm after strong employment report and fears for new escalation of trade war. The USD remained firm against a number of its counterparts on Friday after a strong US employment report and as US President Donald Trump warned that he would be ready to impose additional tariffs on $267 billion worth of Chinese imports. Such tariffs would cover effectively the total amount of Chinese imports in the US. Analysts point out that the markets may not have fully priced in the impact of the US tariffs on all Chinese imports. For the time being, additional tariffs on $200 billion of Chinese imports are still looming. And should there be further escalation, we could see the US dollar strengthening. AUD-USD dropped on Friday, breaking consecutively the 0.7160 and the 0.7115 support levels now turn to resistances. The pair could continue to trade in a bearish market as trade tensions could continue to escalate. However, technically, it should be noted that the RSI indicator in the 4-hour chart is below the reading of 30, implying a rather overcrowded short position. Should the bears continue to reign over the pair's direction, we could see the pair breaking the 0.7060 support line and aim lower for the 0.70 support barrier. Should, on the other hand, the bulls take over, we could see the pair breaking the 0.7115 resistance line and aim higher for the 0.7160 resistance hurdle. On other news, Boris Johnson attacks May over Brexit. According to media, as the deadline of Brexit looms, former UK Foreign Secretary Boris Johnson attacked UK's Prime Minister Theresa May over Brexit, as he stated that May has wrapped a suicide vest around the British Constitution. UK's Home Secretary Javid answered that there are better ways to articulate your differences. On the other side, UK Labour unions seem open to backing a new referendum regarding Brexit. As the Brexit negotiations are set to continue, any headlines could increase volatility for the British pound. Cable continued to trade in a sideways manner on Friday, testing the 1.2960 resistance line. We could see the pair continue to trade in a sideways manner, however, with some bearish tendencies today, as the GBP side might be weakened by today's financial releases and the USD side strengthened by today's fundamentals. Should the market favor the pair's long positions, we could see the pair breaking the 129.60 resistance line and aim for the 130.20 resistance hurdle. Should, on the other hand, the pair come under selling interest, we could see it breaking the 1.2895 support line and aim for the 128.35 support barrier. In today's other economic highlights during the European session, we get from the UK the manufacturing production growth rate and the trade balance figure, both for July. As for speakers, please know that Atlanta Fed President Raphael Bostic speaks. In addition, gold moved in a bears market on Friday, and should you be interested in the precious metal fundamental news, please refer to our gold weekly outlook to be released later on today. As for the week ahead, on Tuesday we get the UK employment data for July and Germany's ZEF economic sentiment for September. On Wednesday, no major financial releases are expected, while on Thursday we get Australia's employment data for August, Bank of England's interest rate decision, Central Bank of Turkey's interest rate decision, ECB's interest rate decision, and the US CPI rates for August. On Friday, the US retail sales growth rate for August is due out. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. You can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Angelos Zittis from IronFX, wishing you solid trading.